This is In Focus, Creamer Media's Insight series focusing on key economic issues. I'm Marianne Webb. This is the second episode of 5 in our series on copper. The global economy's appetite for copper is growing fast, driven by the energy transition and rising electricity needs across sectors, from artificial intelligence to electric vehicles. But is supply keeping pace? To discuss this, I'm joined by Shirley Webber, Head of Resources and Energy Coverage at Absa Corporate and Investment Banking. Shirley, welcome and thank you for having us at your offices here in Sandton, Johannesburg today. How do you see current demand and supply trends in the global copper market, and what is your outlook for the next few years?
Thanks, Marianne, for the question. The copper market we see as a deficit market for the medium term. And why do I say medium term? Medium term, just because of all the geopolitics that's happening around us, as well as muted economic growth because of geopolitics that's happening. We see snippets of increased supply coming through the system. And to give an example, Cobre Panama, FQM's mining operations there, if that becomes start up again, there would be obviously a bigger supply coming through, but ultimately a deficit. And that would mean that pricing will obviously be impacted, and it will be higher pricing coming through the system as well. But I think time will tell. Geopolitics must settle down. We need to see economic growth, and we must also see stable economic environments in many of the countries where copper is obviously very big as a commodity and helping the growth of that country.
How are mining companies positioning themselves to meet future copper demand?
It's actually a very good question, Marianne, because there's a bit of capital discipline that's happening with management looking at, do we develop a brand new mine, greenfields, or do we take existing operations and just make it more efficient? And that can mean many things. So debottlenecking, bringing in, for example, more innovation in the way that we mine, and ultimately it comes down to the efficiency of the mine. Copper projects are very capital intensive, so starting a mine from scratch is not necessarily always the preferred idea. It becomes, let's rather expand existing mining operations, let's do everything around it, let's focus on the ESG part, for example. Maybe renewables become a specific consideration to make it more efficient as well over time, and helping all of the ESG and sustainability activity around it as well. That can be water management, making that more efficient, helping communities to make sure that there's social buy-in for either the expansion of the mine or, for example, starting a new exploration on that as well. But ultimately, it comes down to what is better from a capital use point of view and linking it to sustainability, which helps ultimately the mine efficiency. And where we go through cycles from a pricing point of view, the management will always want to make sure that they can withstand those cycles that is going low. And we've seen that across the African continent.
Prices have been relatively strong and long-term demand signals are clear. Why is supply struggling to keep pace?
Supply and demand for copper have never been in sync, ever. To develop a mine from scratch takes an enormous amount of time. And it doesn't mean 2 years, 3 years. It literally can take anything from 10 to 15, 18 years for a mine to be developed. So the capital intensive nature, just of that timing aspect, must be considered. So again, mentioning that they would rather want to expand existing mining operations than to restart again. So if you start from the exploration side, that can take anything 2 to 4 years. You need to get funding or equity contribution for that exploration. Then getting to a bankable feasibility takes another year or 2 or 3, depending where the ore body is, the development of the mine, and then ultimately, even the rehabilitation of mines must be considered through that process. So that's why the supply is becoming, a problem and a deficit. Many mines have been developed, and it's very geography specific, and also the country risk where the ore body is will have to be considered, hence the supply issue.
There has been some discussion about the lack of major new discoveries. Is exploration falling short, or are new finds simply not large enough?
Again, a good question. Exploration will always be there, but we've seen exploration expenditure dropping dramatically. Again, because of the capital intensive nature, but more so the geographies needs to be considered. And as the energy transition actually happens, I do believe that even smaller deposits will be mined because of the deficit that's out there. The smaller ore bodies would need equity partners, would need help to be developed. And maybe then that's where consolidation in the copper market, especially with smaller ore bodies, will come into play. And that's actually going to be very important, especially in the Africa context, where everyone wants our energy minerals and metals, of which copper is one. So our countries and owners of ore bodies need to be smart when they want to develop, even the smaller ore bodies.
Where do you expect the next major sources of copper to come from?
Currently, the copper deposits, and maybe let's start with the rest of the world and moving back to our backyard, is really sitting in Chile, Peru, obviously Argentina a bit, Russia. And then if you move back to Africa, we're seeing Zambia, we're seeing the DRC, there's snippets in South Africa, as well as in Botswana. So how are we going to assist and help developing those ore bodies? The sizes are obviously South America. That's where the big deposits are sitting. Africa is small, but it's good deposits that we're sitting with. And not small that it's not being developed. I think if you look at Zambia, the copper belt, very important. If you look at that region flowing over to the DRC, also very important. And we mustn't forget about Botswana specifically. One thing that we should be smarter about is the way that we beneficiate. Regional beneficiation becomes critical, especially for efficiency and ensuring that as we go through price cycles, that it gets to be sustainable, the actual operations of these various countries. But South America, definitely, and they will be the bigger player ultimately in this market.
What level of investment is needed to bring meaningful new supply online? And are we seeing enough capital being committed?
Everyone is talking about the energy transition, and copper is playing a major part if you look at the uses of copper in that energy transition. Many research houses are saying that they need 4.5 times the copper for a 2030 and a little bit over 2030 type of deadline. So that means a lot as well for the markets that have copper deposits. And so, from a quantum point of view, it easily becomes $250 billion dollars. Again, depending on what you look at from a research point of view, but it becomes from a time point of view, 4.5% as I've mentioned, and it can be anything 250 to $300 billion worth of investment that must happen for the energy transition. And fortunately for copper, it becomes a very big thing. We mustn't forget about, Australia having bids, Africa having bids. And so it's not sitting all over the world. So those investments can be very country specific. And if it's in jurisdictions where monetary and fiscal policy and it's stable economic environment, it can really be developed, but it's a substantial amount that's needed.
Given the timelines, the capital requirements, and the discovery challenges, are you concerned that copper supply won't keep up with demand?
Copper supply will definitely be a problem. And the reason why I'm saying that is demand is outstripping the supply as we speak. There are not many new copper deposits that's being developed from scratch. Clearly, there's existing expansions happening, going deeper into the mines, etc. We see bits of exploration as well, but there will be a supply deficit unless the prices increase so dramatically, which would then, like we've seen with gold, with prices increasing, that people are willing then to develop the deposits, because if you can do it in a very short period of time, which is not necessarily the case, unless it's open cast and you don't have to go underground, then we will see supply increasing. But for the mid thought process and thinking, I think it's going to be in a deficit.
Shirley, thank you very much, and thank you for your time. The global copper supply picture is sobering, but the challenges are not only geological and financial. Political and geopolitical factors are also at play. In the next episode, we look at how these forces are shaping copper supply chains and what this means for the countries and companies involved.